Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. We are solving the previous year question papers of income tax. That is, we have solved the salary and house property 2024, 22, 25 we have solved. Now today we are solving 2019 it is. In 19 there are two questions on house property. Let us solve these questions. Mr. Shankar is the owner of 3 house properties in Bengaluru and let out all the houses throughout the year. House A, House B, House C. Fair rent, municipal valuation, actual rent, use by tenant, residential, office, residential, repair charges, collection charges. See, these are the expenses which we are not going to show under the house property. Interest on loan. For construction, this will come under the deductions. This will be considered. For marriage of daughter is personal, this won't be considered. For repair of house property, this will be considered. The rare adjustment, municipal tax is 10% of municipal valuation. Municipal tax of House A was paid by owner, but the municipal taxes of House B and House C were paid by tenant. See, please remember, whatever tax paid by owner will be considered. Paid by tenant, we are not going to show under the income from house property. Okay. The house C was remained vacant for 2 months. So this is the vacancy period where he was not received any rent for these 2 months. Compute the income from house property of Mr. Shankar for the assessment year 2019-20. So here we are calculating computation of income from house property of Mr. Shankar for the assessment year 2019-20. House A, House B, House C. Here, for all the 3 houses, you are going to calculate. Why? Because you are receiving a rent for all the 3 houses. Both House A and House C you have given for residential purpose and House B is given for office rent. That is why you are going to calculate income from house property on all the 3 houses. The first value which we are going to consider is municipal value. Municipal value. Municipal value is how much? It is given 1,50,000, 2,00,000, 1,00,000. 1,50,000, 2,00,000, 1,00,000. This municipal value we are comparing with the fair rent. Fair rent is also given. It is 1,80,000, 1,50,000, 1,20,000. 1,80,000, 1,50,000, 1,20,000. Now you are comparing these two values and whichever is higher will be considered. What we will call this amount? This amount is called as notional rent. Which is higher? 1,80,000, 2,00,000, 1,20,000. Now with this notional rent, we are comparing the standard rent. Standard rent, is it given? Standard rent is not given. Whichever is lower, this will be called as expected rent. Expected rent, as it is we are writing whatever there in the notional rent column because standard rent is not given. Now with this expected rent you are comparing the actual rent. Actual rent, it is per month is given. So here you want to take it for whole year. Then you are multiplying per month rent into 12 months. For an year we are going to consider 20,000 into 12, 15,000 into 12 for house B. For house C, 25,000 into 12. Let us calculate this. 20,000 into 12 is 2,40,000. Then 15,000 into 12 is 1,80,000. 25,000 into 12 is 3 lakh. Now, after actual rent, whichever is higher amount you are going to consider, that will be called as gross annual value. Gross annual value. Whichever is higher, that is 2,40,000, 2 lakh, 3 lakh. Now there is a vacancy period, right? What is the 2 months vacancy period for house C? So that should be deducted from gross annual value. Okay. Less vacancy period. House C, what is the rent? 25,000 is the rent. For 2 months, 50,000. This is gross annual value after vacancy period. After vacancy period, 2,40,000, 2,50,000. Now, from this amount, you need to deduct the municipal tax. Municipal tax is house A is paid by owner. House B and C we are not going to consider because it is paid by the tenant. What is the percentage? It is 10%. 10% on 1,50,000 less municipal tax. 1,50,000 into 10%. It is 15,000. House B, C we are not going to consider. Then we will get net annual value. 2,40,000 minus 15,000 is 2,25,000. 2,50,000. Now deductions. Deductions under section 24. What is first deduction? Standard deduction, 30% of NAV. Now let us calculate 2,25,000 into 30%, 67,500. 2 lakh into 30% is 60,000. It is 60,000. 2,50,000 into 30% is 75,000. There is another deduction, that is interest on loan. Interest on loan. It is for construction 1 lakh for house A. House B we are not going to consider. House C repairs we are considering 10,000. Now income from house property, 2,25,000 minus 1,67,500. 57,500. 2 lakh minus 60, 1,40,000. 2,50,000 minus 85,000, 1,65,000. This is the income from the house property. What is total income? Total income from house property 57,500 plus 1,40,000 plus 1,65,000 plus 1,40,000 plus 57,500. 3,62,500 is the total income from the house property. Municipal value, fair rental value, whichever is higher, this will be called as notional rent. We are comparing with standard rent, then we are considering whichever is lower, this will be called as expected rent. We are comparing this with actual rent. If it is given per month, then you should multiply with 12, then we will get whichever is higher as our gross annual value before vacancy period. Vacancy period should be deducted, then we will get gross annual value after vacancy period. Municipal tax paid by owner only we are considering, that should be deducted, then we will get net annual value. Then we need to deduct deductions under section 24. The first deduction is 30% of NAV, then interest on loan for construction and for repair should be considered. Then we will get income from house property. If we add all the income from house properties, we will get total income from house property, that is 3,62,500. Let us solve the next question. Say two questions are there in the 2019. Mr. Arish is the owner of following three house properties in Mysore. The details relating to which are as follows. House 1, House 2, House 3. Actual rent, purpose of use of house property, let out, self-occupied. So you are not going to calculate on House 3. You are calculating only on House 1 and House 2. Standard rent, municipal value, municipal tax paid by Arish, municipal tax paid by tenant, repairs, vacancy period, interest on loan for repairing the house, unrealized rent allowed in the year 2015-16 recovered during the year for the first house. Compute taxable income from house property of Mr. Arish for the assessment year 2019-20. So one new adjustment is also there. Let us calculate computation of taxable income from house property of Mr. Arish for the assessment year 2019-20. House 1, House 2, House 3. It is let out, self-occupied property. So this we are not going to calculate. The first value we are considering is municipal value. Municipal value is 16,000, 14,000. 16,000, 14,000. Then we are comparing this with the fair rental value is not given. Then we will get whichever is higher. Notional rent 16,000, 14,000. Now this amount we are comparing with the standard rent. Standard rent is given. It is 18,000, 12,000, 18,000, 12,000. Then we need to take it whichever is lower. This will be our expected rent. 16,000, 12,000. We are comparing this with the actual rent. Actual rent per annum, directly it is given, no need to calculate. 24,000, 18,000. We need to take whichever is higher. That will be our gross annual value. 24,000, 18,000. There is a vacancy period that should be deducted. What is the vacancy period? 2 months for house 1 less vacancy period. Vacancy period 2 months. It is, if you divide 24,000 divided by 12, you will get 2,000 into 2 months. It is 4,000. Gross annual value after vacancy period. Annual value after vacancy period is 20,000, 18,000. You need to minus municipal tax. Municipal tax paid by owner 1,600, 700. Will get net annual value. Net annual value is 20,000 minus 1,600 is 18,400. 18,000 minus 700 is 17,300. We'll have deductions. Deductions under section 24. The first deduction is standard deduction. 30% of NAV. 30% of NAV is 18,400 into 13%, 5,520. 17,300 into 30%, 5,190. Then there is the interest on loan, that is our second deduction. Interest on loan. Interest on loan for repairing the house 800, 600, 2,000. 800, 600, 2,000. Income from house property 18,400 minus 5,520 minus 800 is 12,080. 17,300 minus 5,190 minus 600, it is 11,510 minus 2,000. And there is a adjustment about unrealized rent. If any unrealized rent is there, that we are going to deduct. Now the unrealized rent has been recovered, so this should be added. How you are adding? The whole amount you are not adding. How to add that one? Add unrealized rent recovered 4,000 is the unrealized rent. It is given. The recovered amount is 4,000. On this, minus 30% of recovered amount. 30% of recovered amount should be deducted. 4,000 minus 30% is 2,800 we will get. If we minus 30%, 2,800 should be added. So our income from house property is plus 12,080 is 14,880, 11,510 minus 2,000. You need to show the total income from house property 14,880 plus 11,510 minus 2,000. 14,880 plus 11,510 minus 2,000. 24,390 is total income from the house property. I hope all of you are understood. Thank you for watching. Have a great day. Only practice makes you perfect. So practice more. And these are the unit which you can score out in an easy way. So only thing, practice. Have a great day.